Good morning. Today is Monday, January the 22nd. The time right now is 7:46 in the morning. It's going to be a very busy week this week. We're going to have a bunch of central banks deciding on interest rate policy, although none of them are expected to shift their monetary policy stance, starting with the Republic Bank of China today, this morning, followed by the Bank of Japan tomorrow. Then we have the Bank of Canada, followed by the ECB, which is the European Central Banks. All four central banks will be deciding on interest rates, so there will be expectation. And of course, on Wednesday, we're going to have a slew of purchasing managers index, which is the PMI, starting off with Germany, Eurozone, UK, and the US. And the big one will be on Thursday. We have the GDP numbers Q4 for the United States, and that should be very interesting because they expect a major markdown in that number from 4.9% to 1.8%. And of course, on Friday, we also have CPI numbers for Japan, as well as the personal consumption expenditure number, the PC numbers for the United States. And this is the number that the Federal Reserve watch to decide if inflation is still a concern. So like I said, it's going to be a very busy week. Now, today we're going to talk a bit about the spot gold. You can see gold prices has not been performing normally because we have seen rising tension in the Middle East. As far as the Red Sea is concerned, we can see the US together the UK has started aerial bombardment of Yemen, and this is in retaliation for the various attack on vessels transpassing the Red Sea. And normally in a situation like this, we should be able to see gold prices surge. Okay, it did went up, but it didn't surge in the magnitude that is usually associated with rising geopolitical tension. On Friday, we have a high of $2,039.42 from a low of $2,001.90 thereabout. So you can see that although we have a bit of about $30 movements, but it is in comparison, not in the magnitude, like I say, that's usually associated with rising international tension. So technically speaking, unless the market can break above this resistance line here, okay, and of course, the more important one is a break above $2,088.55, the market, technically speaking, is still being capped. So although fundamentally we should be buying gold, but the technical outlook does not suggest that gold is going to break out anytime soon. So unless that happens, we probably will see gold prices continue in its three-wave decline. So if this is three-wave decline is overruling the market, then we possibly could see gold prices trading the lower end of the markets to as low as $1,912. So this could be something that we have to watch, because both the fundamental and the technicals are not in sync. So either or must actually come through for me before I can make a decisive decision as to what I want to do. So right now, I will go with the technical, because unless, like I said, the market can break above this resistance line, it is likely to drift lower. Okay, so watch out for further losses in gold prices. Bye-bye. Take care.